Well, a very good morning to you, ladies and gentlemen, and thank you, Miles, very much for that introduction to myself and to my very distinguished panel of this morning. I'm Chris Hayward. I'm the policy chairman and the political leader of the City of London Corporation, which is the governing body of London's financial district, and the convening voice and power of the United Kingdom's financial and professional services sector. And in addition to that, I have the very great privilege of being the Deputy Chairman of the City UK as well, a role I greatly value. Now, adaptation and agility are surely the requirements of our age, as the artificial intelligence revolution gathers pace and trade tremors shake our global economic foundations. I can think, therefore, of no more pressing issue than that raised by this panel's theme. And I can think of no one better placed to comment on where we are and where we're going than my panel here today. But before turning to that discussion, I'd just like to thank the City UK for organising the conference, and Miles for your wider work promoting the UK's financial and professional services sector, something we do in partnership together. And before the country's FPS sector is quite simply world leading, and its role in the health and growth of the UK's economy cannot, I suggest, be overstated. And in advocating for this strategically critical sector, Miles and the whole team at City UK are championing Britain's prosperity at a critical time, and I think that's incredibly important. But returning to our conversation today, I'm delighted to be joined this morning by four FPS leaders who are each ideally placed to comment on the development and delivery of financial and related professional services in an age of rapid and accelerating change. Someone who's very close to the technological transformations of our age and who brings a wealth of expertise in data and digital transformation is Lloyd's of London's Chief Data Officer, Cassandra Vukorep. Thank you very much for being here with us. Complementing a panel with a legal perspective, we're lucky to have Cyrus, Pocha, a partner at Freshfields. Great to have you on board. Cyrus's work focuses on financial services regulation, and he has extensive experience in investment banking, fintech, and investment management. And it's my pleasure to welcome to our panel entrepreneur Anand Sambasivan, the co-founder and chief executive of PrimaryBid, the fintech platform which is revolutioning retail investment participation in our capital markets. And finally, bringing a blockchain technology and digital assets perspective to our discussion, Emma Lovett, the Executive Director of Market Digital Assets at JP Morgan. So I've got a brilliant team, and each of you is an expert in navigating the rapid technological and systemic change, and crucially converting these shifting dynamics into commercial opportunities. And speaking, if I may, in closing in my opening remarks, in the broadest possible terms, that's exactly what our FPS sector must do. It must assert the United Kingdom's ability to lead the various technological and financial revolutions which are, as we speak, sweeping the world. And we must make this country an engine room for growth and for innovation. And so I'm now going to get on with the work. We're going to have a panel discussion, and at the end of the panel discussion, there will be time for you to ask questions yourselves as well. And there's also questions coming into me all the time from our online audience, who are very welcome as well here today. So let me start, Cyrus. I'm going to start with you to kick off. Setting the scene, what sort of regulatory environment for innovation are companies encountering around the world, particularly in key markets like the US, the EU, and Singapore? How do you think that we in the United Kingdom should position ourselves in this context?
Yeah, sure, and thanks very much for the kind introductory words and for having us all on the panel. I mean, I think, what are people seeing in those jurisdictions in terms of regulatory messaging? I think everywhere now is singing from a pro-growth, a pro-innovation agenda. I think the question is, how are those jurisdictions going about it? And I think if you take a step back, they're really all going about it in the way you would absolutely expect them to go about it from a point of view of their historic policy positions, the way that they have historically made their rules and regulations. There was a lot of talk, I remember, about whether the UK should copy the EU and bring in a kind of highly detailed, codified framework for digital assets in the way that they did with MICA. I think MICA and other things like the AI Act in the EU are peculiarly EU methods of fostering innovation in their own way, born out of their civil law jurisdiction, born out of their historical rulemaking. I don't think the UK was ever going to go down that path, and I'm glad it hasn't. You mentioned Singapore. Singapore, I think, along with some other Asian jurisdictions, does have an eye on the UK and what the UK is doing. I think pro-innovation in Singapore is manifested by a slightly more top-down approach. There, I think you see regulators like the MAS, not only operating sandboxes borrowed from the FCA, but actually performing a convening function within the industry, playing a slightly more active role in pulling together industry participants and talking to them about innovation and partnership. You mentioned the US. I mean, I've been on holiday for a week, so it's probably impossible for me to answer that question. I think there's a real mixture, isn't there? There are some real pro-innovation messages coming out of the US. Kay, in the earlier panel, talked about the US looking to streamline regulation, clearly with an eye on fostering innovation. But equally, we seem to have policy dictated by tweet and counter-tweet. And I think there is a degree of uncertainty in the US which remains somewhat problematic. And coming to the UK, I really don't think we're doing as badly as some people say. I think the government's pro-growth agenda is being heard by regulators. And I think we're starting to have the very healthy discussion about how do you balance pro-innovation with what are acceptable risks. And I think that's a very healthy discussion to have. If you measure success or failure by quantity of rules, we are clearly not leading the way. But regulating for innovation, I think, is a lot more than that. And if I could just pick out two points that I think the UK could really focus on. To regulate for innovation, you really have to understand the innovation. You really have to know where the risks are so that you can then think about what proportional rulemaking looks like. I talk to various regulators around the world, and I do slightly worry that our regulators are a little bit behind in that understanding of the technology and where it is going. And I think the City UK and industry participants have a real role in helping them with that. And the second one is a slightly more broader point. It's the overall cost of regulation. Now, you may say you can innovate outside the regulated space, inside the regulated space. But I think there is a real opportunity to simplify the regulatory regime in the UK. I was slightly disappointed by the recent announcements that the changes to the FCA handbook, for example, are going to be relatively light touch, are going to be tidy up in nature, when it's actually a bit of a mess now. And there's a real opportunity, I think, in applying technology, but also just in applying a bit of common sense in terms of updating and simplifying the rules. So there are a couple of thoughts from a UK perspective, but I think we shouldn't underestimate how much other regulators still look to the UK as an exemplar. And I think the UK is still doing a lot of positive work in adapting to the government's pro-growth agenda.
Thank you very much. I think that's a really great opening to our discussion. You mentioned the US, we talked about the US. I'll be in the US all next week, and while I'm there, I'm going to be meeting the regulators in DC, and it'll be very interesting to get face-to-face with them and understand their take on what's likely to be happening as we move through the term of this presidency. Cassandra, can I turn to you now? Given the imperative to support innovation and evolving international competition, how much risk should the United Kingdom be willing to take? And how do we balance that with the need for that regulatory oversight that we're talking about? Should the United Kingdom accept potential losses as part of fostering a more dynamic and innovative industry?
So I think in terms of managing risk, the only current risk is actually not doing anything and not taking the risk. I've noticed as I've moved here, the regulators have created a culture of making businesses feel that they have to ask for permission before they need to move, which stifles innovation. The regulators need to get really comfortable with the ability to act first and ask for forgiveness later. And they need to be really proactive in the way that they do that and not be punitive when companies go out and do that. IT, well, tech, AI is moving faster than anything that we have seen, right? So what it is doing is breaking down barriers to entry for especially financial services, insurance, et cetera, which have normally had big barriers to entry to get in, and you've got all these new fintechs, pioneerings coming up, but they can't productionize in the way that they really need to for a couple of reasons. One, the regulation is still quite punitive, so that's what's stopping them. And the other one is, if you look at the way the United States works in terms of capital and relief for entrepreneurs, we're not as advanced in that thought process. So you've got two things. You've got the regulation, and then you have your tax regime. And you're not seeing them go into production. And that's what's going to keep the UK viable, is keeping that mix. But on the other hand, you've got your institutions, right, who are sitting with legacy architecture, hard to move. They've got other priorities. At the moment, you've probably got a whole bunch of shifting priorities going, what should we do? Where should we spend money? Was that a good idea? But at the end of the day, getting your IT, your actual foundations and your operations in shape for the AI revolution is critical, because if you're not, it will take your institutions out. And the ones that aren't able to move, it won't be, oh, you have 2-3 years to get on the bus, you missed the bus, you're gone, because it's moving that much faster. And what you've got right now, for example, you've got 66% of most organizations have started AI, they've got AI someplace, but only 8% have put it across 5 business units. They can't scale it. And it's a lot of money, it's a lot of dedication to modernize that estate. And I'm going to probably take a card out of Baroness Swinburne when she said, this is a time for us to get our house in order, maybe not with regulators, but your major institutions to get their house in order. Because you don't know where you're going week from week in other policy, but you do know getting rid of some of that operational drag is critical. But you get tax breaks if you're creating more product or new, but what about modernization? Is there a way to kind of look at some of the, when you're investing in that sort of capital modernization, a way to give a break, make it more encouraging to clean up the infrastructure, so you're prepping your big institutions for being prepped for AI and making sure they're critical. Sticking with culture, I think the other one is the way the culture has gone with regulators. It's very punitive if you fail. If you look at Google is successful for multiple reasons, but one of them, it has a culture of fast fail and it rewards failure, because they want people to try, they want them to innovate, and they don't want them to be stigmatized for failure, and so they build that into the culture. And if you look at the way the UK even works with bankruptcy, not saying people should go bankrupt, but it is much more punitive. If you try, you fail, it's 6 years, you're out of the race. And there's just a different way of looking at failure in order to encourage people to try, because not everything's a hit, right? If you look at Spotify didn't make a profit. It started in 2008. It didn't make a profit till 2024. I believe the profit was 1.14 billion euros when it did. But then on the other hand, you had Tay from Microsoft, which became not the best chatbot we've ever seen. So they're not all winners, but at the end, they were able to try, they were able to innovate, they were able to learn, and they were able to take advantage of that. And I think we're in an opportunity, if the regulators allow companies, small enterprise, to actually be able to scale and get out of their way, but then encourage your big institutions to change, to modernize, and give them an incentive to do so, you're going to create a much better balance, and it's both tax and regulation that need to be looked at.
Thank you very much indeed, Cassandra, for that. I'm really here, as you know, to quiz you guys, but my team said to me, you must tell them what your position is. So use your chair's prerogative to say what the corporation's position is. Because the risk question is, I think, hugely important. Just a few words from me on the basis that I do think since the financial collapse, we've driven the word risk. It's almost a dirty word. We've driven it out of our agenda. And I think we have to discuss it if we really want to be serious about gaining economic growth in this country. So I really echo the Chancellor's position when, in her intervention, I think last year, when she urged regulators to support responsible and informed risk-taking across the economy. And I think that's very important. And I've sort of been warning in speeches I've been making recently that we've, here in Britain, almost embraced a kind of safetyism, and we've become allergic to risk. And we've got to spur growth and innovation, so we've got to celebrate the rewards of responsible risk-taking and move on from occasional failures that do and will inevitably occur. So I don't think we should pretend they're not going to occur. So we've got to regulate, but it's a question of framing an emphasis, as you were sort of saying. We've got to regulate to grow, and we've got to regulate to encourage innovation, I think, and that's really the position I tend to take. Cyrus, back to you if I may. Following on from this, the government and financial services regulators have signalled their intent to support crypto, but progress under the roadmap appears slower than in other markets, I think it's fair to say. So from your client's perspective, do you see this as a lost opportunity or a sensible, measured approach?
It's difficult. That's a difficult question. I mean, I think in the crypto space, I do worry that the idea of a 2-year roadmap is sort of, if what you're saying is it's going to take 2 years of hard thought and debate and discussion to understand things sufficiently well in order to regulate, I think it's an admission that we're never going to get regulation that is fit for purpose, because, you know, if 2 years is a long time in politics, it's an absolute eternity in the crypto space. And so I do worry that, you know, whilst the UK is making the right noises, 2 years is a bit too long. And if you couple that with the fact that I think we kind of all know the broad direction of travel, you know, I think, you know, the UK has been pretty clear that the idea is that it will bring crypto assets within the definition of specified investments. In that way, they will, you know, activities in relation to them that are usually regulated, dealing, advice, arranging, will be brought within the regulatory perimeter. It does feel to me that, you know, some of these proposals can be brought into effect perhaps a bit sooner. Now, you know, I'm not belittling the challenges, and I think there are key issues that need to be debated. But, you know, echoing, I think, some of the points that have already been made, I think there is a point where you have to act, and then you have to see what works, and then you have to be flexible. The idea that you're going to have a perfect debate and then act on perfect information, even if that were possible, the landscape will have changed. And I think it's particularly important for the UK because at the moment, the UK is in sort of a weird limbo world when it comes to crypto, where I think we're actually not looking at the risks and proportionally regulating for them. You know, at present, the view is that the simplest crypto derivative, the simplest crypto swap, is apparently so dangerous for retail customers that they're banned from buying them. And yet they can buy the underlying with almost no regulatory protections at all. Crypto exchanges have to register for AML purposes, but they're not prudentially governed, and yet they custody a huge amount of crypto assets. And so I think there's, at the moment in the UK, this sort of mismatch at times between risks and an appropriate regulation. You know, we've got the Digital Assets Bill, which is one of my favourite bills in the world. It's a single clause, and all it does is say that it is possible to have a third type of property, but that is still a bill. The purpose of that is to enable our courts to use our, you know, absolute market-leading and key competitive advantage of flexibility to be able to iterate the rules around the proprietary rights of crypto assets. And so, What I think our clients want above all else is probably certainty, right? Closely followed by effective and proportionate rulemaking. And I don't think moving a bit faster is necessarily inconsistent with those things. And I think we should be looking at sort of key areas where we can improve things now. By my count, there are 4 different definitions of crypto asset in the UK, derived from 4 different pieces of rulemaking. There are examples like that where I think action can be taken quicker. Whether it's first mover, second mover, third mover, fourth mover, ultimately we need to get it right. And I still have faith in UK regulators and UK policymakers that we are capable of getting it right. But to the point made before, the greatest risk being inaction, I do think we are in that space, particularly in the context of crypto and digital assets.
Thank you very much. Anand, I want to move on to you now, and I want to talk about fintech. The United Kingdom is a leading fintech hub. How does it maintain that position?
Yeah, it is the leading fintech hub. Leadership is an interesting topic. I sort of look at our panel session, adapting to shifting dynamics. I have to admit, I took a little umbrage to that, right? I sort of look at it and it doesn't give us enough credit for the ambition we've showed in this industry. It certainly doesn't give us enough credit for the leadership we currently have. I would much rather reframe the topic to be, how does the UK keep and shift the global trends in this industry that we have? And how do we continue to lead in it? Just like we've done in fintech, right? So with blockchain and particularly AI, right? So, and that's not hubris, right? We are the #1 global fintech player, and no other country has sort of come close to achieving the goals that we have over here. And we have a right to win this space, and we should kind of attack it from that perspective. So the real question to me is, what is leadership, right? Is it being first, right? We've been first before, and it hasn't always worked, right? It's about consistency. So I think about, we've done the work on taking on the hard reforms, we've pushed through innovation, yet we get stuck in this, consultation doom loop, and get gummed up, and we get then leapfrogged by other countries. This kind of old phrase, the second mouse gets the cheese, and they keep getting the cheese. We're the first mouse, but it keeps winning. So how do we keep that consistency? And it applies across, open banking. It applies across digital gilts, as I'm sure Emma's going to talk about. And certainly the topic closest to my heart, which is capital markets. We had all the rules, and then we got leapfrogged in terms of implementation. So the key part for me on thinking about fintech and leadership and advancing technologies is how do we push it forward, and what does that mean? So, and I'll just echo some of the things I've heard today. The regulators play probably the most crucial part. And by the way, I know that a lot of people like to kind of sit on top of them, but let's give them credit where it's due. The sandbox is an amazing innovation. I know, but the question is, I know the on-ramp to the sandbox. What's the off-ramp? How do we get out of the sandbox? How do we implement the technologies that have been built there? Number one. And the second point, from Cyrus, and probably huge, right? I'm sitting on the ground, I'm speaking to so many founders. I can tell you the stuff coming to market in UK financial services, all AI driven, is mind-boggling. And the FCA is going to get a deluge of applications on stuff that founders want to do, and super cool ideas. But there's no way to have a sort of common discussion unless the knowledge of how AI works is understood all the way from the top down. And I don't think this is just a pure regulator problem. I don't know how many people in this room could tell me what GPT actually stands for. The regulator needs to fully understand what is a transformer, how do neural networks work, how does predictive technology work, what are the pros, what are the cons, what are the risks, so they can have an even discussion with founders that are looking to innovate in the space. And I think for me that is a really crucial thing, and it's not that hard. I could put together a list of 5 or 6 YouTube videos and documents to read, and then do a test of the afterwards, and then just go for it from there. So Stop there.
Thanks, Anand. That's great answer. Thank you. Look, moving on to our second theme of today, the changes needed to drive technological innovation. And Emma, I'm going to turn to you at this point. So can I ask you, how can new digital solutions enable retail investors to better access a wider range of investment options and promote greater financial inclusion? You know, what are the key considerations for ensuring this expansion of access is both safe and beneficial for retail investors?
So I'm actually going to come back to sort of Cyrus's point around crypto. And I don't have the UK numbers, but in the US, a fifth of all adult Americans hold crypto, which is almost as many as have a mortgage. Now, there is a slight generational shift in the sense that they identified from the statistics that it's often younger investors that hold the cryptocurrencies. But I think as we start to think about the shape of the financial markets, we really need to address the need of those investors. Yeah. What do they expect and what will they expect from the financial markets? Cryptocurrencies, they can trade that 24/7. You can't trade traditional financial instruments 24/7. So I think that's one of the drivers around why these sort of digital assets have started to come about. And in essence, when I think of the word digital assets, what I think about is an asset that in some ways uses blockchain technology within its life cycle to make it more digital. So not necessarily talking about new assets completely, but just harnessing the blockchain technology that crypto is written on, but doing it in a very traditional financial sense. And I think the way that this will help the industry move forward and ultimately get to improvements for the retail investors is that the technology is modern, it's innovative, it is emerging, so it's not an off-the-shelf product yet, but it's programmable. So in essence, you can have 24/7 trading. I don't know if the market will land there. I don't know if that's something that they want. I won't take the credit for it, but Larry Fink, the CEO of BlackRock, wrote in his recent letter to shareholders that he believes the world will be fractionalized over the sort of short to medium term. And I think about how much has changed when we think about payments. 20 years ago, we were still using cash. We were still using checkbooks. We then moved on to debit cards. We then, now we often use our phone to make these payments. As consumers, we are we've got this massive appetite to jump on board and to use the most efficient thing. I'm not entirely sure that the financial services industry has caught up with that. The way that trades are settled, the way that the market is open, just really reflects what happened 20, 30 years ago when they had the constraints there that meant that was what the processes were. Now we have this technology that we can harness in a safe way to really sort of start catching up on that side with, I think, what the new generation of retail investors will expect.
Super. Thank you very much indeed. Anand, I want to come back to you. You touched on AI in your previous answer to me, but as AI continues to transform financial services, what measures can we take to encourage collaboration between AI companies and regulators to create thoughtful and effective regulations?
Look, I kind of touched upon this in my last answer, but I'll say it again. The FCA is going to receive, now and over the next sort of 12, 24 months, a huge amount of applications from new companies and existing companies looking to take on AI business models, and some foundational to their existence. And, unless we have we being the regulator, a thorough understanding of how the technology works, the pros and cons around it, it's going to be impossible to assess the risk of these business models. For example, it's generative, right? So some of it's largely probabilistic. So if it's an advisory company that's looking to use, generative AI, what does that mean in terms of hallucinations? Like, how did the temperature of the model matter in terms of this sort of stuff? And how are you going to have really clever discussions with the founders and on this point. And I'll tell you, I don't think there's a regulator in the world that understands this, that's actually gone through it. So for the UK to be the first, for him to attract companies here into the sandbox, number one, and then having meaningful discussions and dialogue with the regulator effectively on the same level around AI is going to be so fulfilling, and it will continue our leadership. So I keep coming back to this notion of education. I think it not only applies to retail investors and how they assess risk, I think it also applies to our own infrastructure, regulatory infrastructure, and how we understand technologies to assess risk.
Thank you very much indeed. I mean, turning our sights to the future and what our agenda should be going forward, Emma, technological innovation is increasingly blurring the lines between financial and tech companies, creating new challenges for regulators. From your perspective, with a higher number of new entrants and widening regulatory parameters, how can the UK regulate effectively in the future?
So initially what I wanted to do was just sort of call out the work that the UK has done with the Digital Security Sandbox. First of all, through a consultancy period where they spoke to a wide range of potential participants about how they could regulate. They looked at the EMIR pilot regime, which was something that had been done in Europe, and sort of like sought to work out what worked and what didn't work with that regulatory infrastructure. And then recently, the government, so Rachel Reeves in her Mansion House statement in November announced that they would issue a UK digital gilt. And I think what's quite elegant about the way that the government have gone about putting together, they've called it the Digit, is that they said that it will be done in tandem with the UK Digital Security Sandbox. And the reason why I think that's elegant is because I think what we saw in Europe was even though the EMIR had the pilot regime, actually a lot of these digital issuances were taking place outside of that regulatory regime. And so by the UK saying that they will issue a UK gilt and make sure that it actually happens within the UK digital sandbox, I think that that's a really effective way to regulate, because obviously it's going to be done in tandem. I think at a lot of conferences, there's talk about regulatory regimes that sort of stand in isolation, jurisdiction by jurisdiction. And I did just want to comment really quickly about SEC Commissioner Hester Peirce, who actually was quite vocal about a joint sandbox between the UK and the US for digital assets. And I appreciate that was last year. We've since had the new administration, and there hasn't necessarily, to my knowledge, been work that started on this. But I actually think that that would really, really provide a catalyst at looking at how something can happen cross-border so it doesn't have to happen jurisdiction by jurisdiction, because that's often what we come up against, that something is permitted in one jurisdiction, but you need to completely rewrite and rechange all the terms and conditions if you want to do it in another jurisdiction. So I think that the concept of having these partnered cross-border joint sandboxes would be, I think that would be really beneficial for all participants.
Yeah, I 100% agree. I've engaged in these discussions directly with Hester, and I think what you've hit on there, what she's hit on, is really, really important actually for us in the sector. Cassandra, I want to come back and I want to start talking about skills and talent, if I may, with you. To sustain innovation and growth, the UK's clearly got to remain a hub for global talent, right? How can we simplify the process for skilled individuals to arrive, thrive, and stay, so that they can contribute their innovations to the market?
If I can I'm probably going to flip this and go into the stay. An environment has been created where we do know the UK is got a great culture, and I don't think we need to do a lot of promotion to get people here, because people are being pushed here from the science communities, from the tech community, because of what's happening overseas. We just have to be agile to get them in, take away the anti-immigrant status and that's going on. I'm sitting here as an immigrant. But innovation is saying that. I'm doing my British citizenship, so I'm taking the lovely test at the moment. And you have to stay, you learn all the innovation that happens in in Britain, right? So the World Wide Web, the TV, IVF, I have to memorize all this. But it's amazing what is here. I think where your challenge is, and where and William Wright said, capital, just do nothing, capital is flowing here. Are we a parking lot? Are people just flooding here right now for a safe haven for 4 years, and then you're going to lose them? How do you make this their home? How do you make it them stay? And it's not necessarily regulation, but I'm going to go back to tax. The tax system is a bit punitive at the higher levels. And I'm not saying you got to get down to Dubai, Singapore, and that, but you have to remove the debate that those areas are actually better once you do start doing wealth creation, because people take all the sandboxes, all the innovation. I was at the UK Space Agency a couple of weeks ago. There's great things out there. They innovate, they start up, and you lost arm, and then they leave because it's too expensive and it's too hard. So get the talent in, but you've got to look at the policies that make people stay.
Thank you very much. And my final formal question to the panel is to Anand, following on from Cassandra's points, what specific policies or initiatives would you recommend? And then we'll open it up to the floor and indeed our online audience as well.
Look, I think specific policies is way above my pay grade. It's just a tough one. I'll say that I'm a British immigrant. Doubly important for me because India didn't allow two citizenships, so I actually had to give up my other citizenship to be British. And to your tax point, yeah, tax is high. Tax is high in many places. I think you get what you pay for, so I'm sort of happy to pay my tax to be here. I think, I'll give 2 anecdotal points on that I've seen, and I think the government just needs to kind of take in all this data, and they're getting a lot of it, and then make the decisions they need to, because it's a very tough decision. Number one, I'm seeing people that I've hired, and then specifically I'm talking about the non-dom tax policy, from the U.S. They've attracted from the U.S., from the Valley, top tier talent, from tier 1 tech companies. They came here and then they had to leave, right? Because of the non-dom. Number one, and number two, a lot of my angel shareholders that got our company going from the very beginning, where it was really tough, their early stage fundraising. Almost all of them, literally all of them, have left. And so, your ability to attract capital, at least mine would have been reduced as as an early stage company. So, and there is an immigration thought process, but I don't think that applies to high skilled labor. I mean, look at the U.S., which is a gravitational pull for talent. Even they're saying golden visas, let's get people in. Founders and operators are going to be the single most crucial driving factor for the country, more than capital, more than market, everything. So we need to have a system that brings those founders and operators here, particularly at a moment where AI is just getting going. People want to innovate. We've got all the other stuff together. So the policies are pretty crucial, but sadly, I can't tell you what they are.
Okay, well, look, I want to thank the panel because they've given us a fantastic discussion and answering my points to them. We're now going to open this up to you here in the room and indeed to our online audience. And I've got some questions that have come in during our discussion, which I shall put to the panel and probably a bit of a free-for-all as to who answers them, but I'm sure you'll share them out in a fair way. But first of all, if there's anyone in the room would like, we've got some mics. We can bring a microphone to you. If you tell us, who you are, who you represent, and your question, and in particular, if there's a particular panel member you'd like to direct it to. So I can see young man over here in the second row. I say young because I know him quite well. So. James, we'll bring you a mic.
Thank you, Chris. I'm James Tunbridge, a tech lawyer, but also a member of the City of London Corporation, which is why I get the joy of Chris making fun of me on a regular basis. My question actually is to the whole panel. You talked a little bit about talent, you talked a little bit about migration. I'm very interested in what the panel thinks about the UK government's approach to student visas and young people visas. We've got, historically speaking, from Canada, from Australia, an ability to come to the United Kingdom for a couple of years if you're under 35 relatively easily. That's all up for debate. There's a lot of discussion, a lot of thoughts about where the government might be going with it. I'm intrigued as to what you think about the value of mobile talent, people coming and spending time in the UK?
Great.
I was unfortunately too old when I immigrated here to take advantage of the Canadian visa. So I had to parlay my EU citizenship. Thank God I was here long enough before Brexit to do settlement status. But I would say that policy, I'm a big fan of, right? It's emerging talent who still have energy, who are inspired, right? If you ever really want something done from a societal or a charity-wise, get a 20-year-old who cares about it to do it. They still have the energy, and they love, and they're not beaten down. So getting that age group in to your companies thinking differently, continuing that multiculturalism, I think is a no-brainer. If they're good, then a company will sponsor them. They will stay, they will get citizenship, right? Because you don't automatically get citizenship if you have those types of visas. And therefore that, oh, well, they're just going to sit on the system, well, it weeds that out. So debatable, it's for most of the Commonwealth, not all of the Commonwealth, which I do think is a challenge. It's discriminatory. But they should be looking to expand that as an easy way as opposed to shutting it down.
Thank you very much indeed. Is there another question in the room? And then I'll take maybe one or two from our online audience. No? Okay. So can I just take one question from the online audience just so that they feel included? Okay. I promise you only be one then. As we've discussed today, a number of emerging trends are poised to reshape the delivery of financial services. What is the one key area you would advise the industry to prioritize to ensure that we not only adapt to these shifting dynamics, but also maintain our position as a global leader in innovation and expertise? Quick one-line answer from each member of the panel, starting with you, Cassandra.
Oh, no, I'm...
No, not you. No, we'll move on.
I wasn't listening to the question.
Well, don't worry, we'll move on again then. No problem. Emma, one-ish.
Well, I mean, I guess I've got to say distributed ledger technology and blockchain. But I think it's more around reframing our thoughts into accepting new technologies and not being cautious of everything.
Super.
The leading regulatory space for AI.
Good, fantastic. Look, I'd like to thank our panelists for, hope you'll agree with me, it's been a really fascinating and thought-provoking discussion here this morning. These questions around technology, innovation, regulation, they will define the business environment for generations to come without any doubt. And it's vital that London seizes this opportunity to capture the potential and the emerging technologies and lead in driving new product innovations. I genuinely believe that, as ever, the City of London's agility and ability to evolve will prove crucial. So thank you for your contributions today, and to our audience, both here and online. And please put your hands together and just thank our panel for